Hi everyone, so welcome back to the channel. So as you know, I've made a lot of videos in the past about Alibaba, but at the moment, the price just keeps falling. It's getting lower and lower. So I used to be saying that 220 was quite a good buy price. Anything around 200 was exceptional. The price is like 155 or something at the moment. So you're probably wondering, well, what the heck is going on here? Is this just going to continue going in? Should we actually be holding on to this, or should we be buying more, or what should we be doing here? So I'm going to go through and double check everything for us and see if we can build up some conviction in this idea. I'm doing a high level approach of Alibaba today, and I've done deep dives in the past. So I'm going to look at the current situation. I'm going to go through a 9-point checklist, and then I'm going to give you my opinion. Are you feeling nervous about this? Well, a lot of people are. I'm getting a lot of comments saying they're selling out. They can't handle the dramatic price falling here. It's just collapsing essentially. It's gone from a high 200s at the start of the year, 280 or something like that, all the way down to 150. It's nearly halved in value. I think it's over half in value now, actually. The problem that I'm seeing is that the fear of the Chinese government interfering with Alibaba's growth and Alibaba's monopoly that they have in the Chinese world, that it's going to eat away at their growth. The price has obviously come down because of that reason. My opinion is, well, I'm trying to think of it rationally and think, what is more likely going to happen? Do I think that all this hype and media around the Chinese government interfering so much in these big Chinese tech companies, do I think that's just going to blow over and the media are going to sort of move on to something a little bit more interesting and people are just going to get sick of listening about the Chinese regulations? Or do I think Alibaba's business is actually crippled and they're going to really be hampered over the next 10 years? Well, that's how I'm thinking about it. I'm trying to think which one is more likely. So the first thing I want to do is I want to check revenue. So in the income statement, we can see that revenue has been growing. Well, it's been growing every year and it's growing at around about somewhere between 35 and 50% per year for the last 6 or 7 years. That's incredible revenue growth. It's probably going to slow down because that is unsustainable growth. But look, that's exceptionally high, so we can definitely give them a tick there. The next thing we want to look at is the gross margins. Now, the gross margins for Alibaba are they have actually been declining. Now that's not great to see. It's sitting around 40% now, and that's actually still pretty decent. That's about what I'm looking for. 40% is sort of my minimum kind of range for gross margins. Gives them a bit of a buffer, but it has been declining. So that's not perfect. So we can give them a cross. Next thing we go check for is return on invested capital. We want this sort of double digits and solid. So if we have a look over the last 4 or 5 years, it's been around about 10 to 15% over that period of time. That's fine. It's been fluctuating a little bit, but it's actually pretty solid. And if we look at other metrics like return on equity, it's been higher than that. It's been sort of around 15 to 20% range. The return on invested capital and return on equity numbers are pretty decent. They're okay. They're not mind blowing, but they're stable, so that's fine. Next thing we want to look for is the debt. Now, debt is pretty easy to look for. We go into the balance sheet and we look at the current assets, 650 billion Chinese yuan, and the total current liabilities is about only 370. So we want that current assets to be higher than current liabilities, which it is. So that's great. We give that a tick. Then we go have a look at free cash flow. Now, free cash flow is really important because that's how we sort of get our return as an investor. So the management team, they can give this back to us as dividends, or they can buy back shares, or they can pay down debt. That's sort of what they can use with that free cash flow. Seeing this growing is fantastic. And over the last few years, yeah, it's been growing very well. And it's now sitting at about, it looks like it's going to dip a little bit in the past sort of 12 months, but that's not a problem because the trend over the last 5 years has definitely been very positive. So that's all very good news. We can just move on from that. Now, if you're interested in the brokerage accounts that I use Interactive Brokers and Saxo Bank. I think Interactive Brokers is probably the best because they have the best fees. The exchange rates are really good, and there's no monthly maintenance fees anymore for Interactive Brokers. So that's fantastic. I think they're the best. They've got a long stable history of performance. They give you access to international markets as well. So that's my preferred broker, link in the description. So So now we turn to shares outstanding. This is really important because if this number is getting bigger, it actually means we're getting diluted. Now that's a problem. It means the ownership in the company is actually getting weaker and we want to have more value. So we actually want to see this number going down. Now it has been going up, but just recently, Alibaba have come out and said they want to do share buybacks and quite aggressive share buybacks. So we're actually going to have to wait for this to actually come to fruition, but just by announcing that, and they're going to try to buy a lot of shares back, I think they think it's undervalued, the share price at the moment. I'm going to give them a tick for the moment, but I would want to watch this in the future just to make sure this actually happens. But shares outstanding is going to go down in the next period. So that's really good news. Then we look to insider ownership. We want the management team incentivized just like we are as shareholders. If they're making a big salary and not having much stake in the company in terms of shares, well, that's a problem. So we really want to see the owners in the same boat as us. And if we look at the list of shareholders, we have, well, this is actually Jack Ma as the second biggest shareholder. He is the old CEO of the company. And we have Joseph Tsai, who is he's got $500 million in Alibaba stock. And he's the current CEO and he's the person running the show at the moment. That's very strong incentives for him. He's like $500 million is tied up in the stock. That's pretty strong incentives. I'm happy to give that a tick. No problems at all with the insiders there. Now we go have a look at which super investors have invested in this company. And look, these guys are a lot smarter than me. They've had decades of experience. They know what they're doing. They've done a lot more research than me as well. So to have them buying and investing in the same company gives me a lot more conviction. I think it's really good to see this. So look, as you can see by this list, there's some pretty impressive names here. We've got Monish Babrai, Charlie Munger, Greg Alexander, Guy Spear. This list gives me a lot of conviction, so I'm very happy to give this a tick here. Then we turn to price. Price is obviously the most important thing here, what we're going to pay. If we're paying $1,000 for Alibaba shares, that would be insane because that's not what they're worth. We need to find out what they're actually worth. So to do that, I use my intrinsic value calculator. Now, I've already plugged in a lot of the information here already, and I'm using, I did this previously, and I used growth rates of like 30% because that revenue was growing at like 35, 40%. I'm like, maybe that keeps going. Maybe it just slows down a little to 30%. If I do that, and then after 5 years, it slows down to say 18%, it looks like I'd want to buy it at about $190. Now, 30% growth for the next 5 years. Let's be way more conservative than that. Let's call it 22%. Now, it would tell me that I probably should give it a multiple of even 20. This is my absolute most conservative situation. It says I should be buying at about $140. Now, the share price isn't actually at $140, but this would be incredible buying at $140. I probably would prefer to use a discount rate not so aggressive as 30% for Alibaba. And I'm probably going to settle for numbers somewhere around here as I would say a very conservative situation. We're talking now $170. Now, I was buying at even $220 to sort of get into this position. I was buying more at $200. I sold puts at $180. Anything under $220 is pretty good buying. Anything under $200 is strong buying. Anything under $170 is fantastic buying. I can play around with these numbers all day, but look, I'm splitting hairs here at the moment. It's at a good price. So after all that, well, what do you think? I don't think we should be 100% invested into Alibaba because we might be wrong, but this is, I think, a fantastic mental test at the moment. Watching my biggest position go down way below what I paid for it is good for my brain to understand that I buy something, it goes down, it's okay. I'm observing all of the noise and fear that's out there. I'm getting a lot of comments saying they can't handle this anymore and they're selling. I'm actually enjoying the ride. We are learning a lot about ourselves as investors and about how the market works and the psychology of the market. I've bought a great business that's growing and it's at a good price. With the share buybacks on the cards as well, and I'm investing alongside all of those amazing investors. I'd love to hear what you think. I hope this has helped you just think about the position again, and you sort of need to double check yourself sometimes when the stock prices are falling because, well, maybe you feel like you've missed something, but I don't think we've missed something here. I think we're okay. Please do your own work on this as well, but look, let's just give it some time. It'll be okay. And for those of you who have stayed right to the end of this video, I appreciate that a lot. Please give the video a like before you leave if you enjoyed it, and I will see you next time.